Most people were taught to follow the rules with money. Save it, spend it, borrow it, pay interest, hope retirement works out. But what if the rules were written by the very system keeping you stuck? Welcome to Cashflow Legendz, the show where we challenge conventional financial thinking, expose the hidden leaks in your cash flow, and help families and business owners build more control, certainty, and legacy. This show is for educational purposes only, not financial, tax, or legal advice. Hosted by Nate, Brandon, and Brock. Money, cash flow, legacy. Break the rules. Build your legend.
Welcome back to Cashflow Legendz. I am so excited that Nate and Brock are both here. It feels like we've been on a little bit of a run where Nate's been out or Brock's been out, or even we've missed a whole week of recording because we were all out. So excited to be here today. Guys, we were reading before we hit record the value of thankfulness and gratitude. And this has nothing to do with our conversation today, but what's one thing that you're thankful for? And the whole point of the devotional is that God doesn't like grumblers. Boy, that kicked me in the stomach because I can grumble under my breath sometimes, and nobody knows it, but he does. So, what's one thing you're grateful for?
I'll say conviction of the Holy Spirit is something I'm incredibly grateful for. Shared that Sunday morning, the Lord really got a hold of me and convicted me about something that just some sin that I had justified in my mind. And it wasn't one of those great big things that, would like disqualify me from, serving in the church or anything. It's not one of those great big things, but it's one of those things that was hindering my relationship. And I had just done a really good job of sort of compartmentalizing that. And, but the Lord just kind of wrecked my heart Sunday morning and showed me no, you're at fault, buddy. You need to quit making excuses and just deal with it.
Oh, don't you love that?
Yeah.
Brock, what about you?
I'll be a little bit lighter than that.
Okay, thank you. We'll balance it out.
I am thankful for the warmer weather we're starting to have again.
That's good. Yeah, I'll piggyback on that, and I'll meet both of you where y'all are. I'm thankful that I have a business partner that I get to meet with every Monday, and we get called to the carpet. We get called up because we know that we can tell each other and where we're struggling enough that we can't lie to each other. It's very obvious. And then the weather piece, I sat out and watched our youngest at soccer practice yesterday do something that he loves, and the weather was perfect. Like in East Texas, you don't hardly ever do you have that day where it's 75 to 80 with a cool breeze, and that's it. There's always cold weather coming or hot weather that's been there forever. So it was a blessing. All right, guys, unrelated to what you're grateful for, or maybe we can swing it into what we are grateful for. There's a section in Nelson's book, Becoming Your Own Banker, where he talks about what if I am uninsurable? And one of the things that I've been really wanting us to
Can you say that to people
Yeah.
that have trouble with your accent there, Brandon?
Brock, why don't you say it for us? Because I have that East Texas twang.
I think what you were saying there is, what do we do if we are uninsurable?
Yes, correct. So, guys, I have no problem being coached up because I know I have an East Texas twang, and it is hard to fight through. So, what if we are uninsurable? Okay. So, what does that mean to you guys in regard to are we asking the right question when it comes to becoming your own banker? That's really the angle I want to take it from. So if you're brand new and you never heard about becoming your own banker before, and you hear the discussion of being insurable or uninsurable, and or if you've been around a long time and you've been practicing IBC in your life, then that means probably something quite a bit different, because I don't think we're asking the right question. So is qualifying really the right question? And why do you think people start there if they're new to this?
So I think we have to acknowledge just how important it was for Nelson to put this in there. Because when Nelson wrote the book, he said, I wrote it for the layperson. I didn't write it for a life insurance agent or anything like that. So this is something that life insurance people would understand, but the layperson, the average everyday, average Joe would not understand that the process and the practice and the principles that he outlines in this book don't necessarily have to go away just because you can't get a policy on yourself. He didn't want anybody to come to the end of the book and go, well, I can't qualify, so I guess this conversation, just isn't for me. So
Yeah.
being uninsurable does not mean that you are disqualified from being able to apply these things in your life.
Brock, touch on a little bit in our world. We all really practice and believe Nelson's principles, becoming your own banker and the infinite banking concept. But we have people come to us from different walks of life, as a whole. In the traditional sales world, your ideal client may be a little different than ours. But when people think about being uninsurable before they've read Becoming Your Own Banker, what are they purely thinking of in the sense of product versus process?
Can you ask that one more time?
Yeah. Do you find that when somebody thinks about being uninsurable, they're basing it off of a product and an approval system versus a process and a cash flow banking system? And they're really, like Nate just said, they're really two different things, but they can be joined together more efficiently.
Yeah, I think when the first thing that I think we need to note is people need to wake up to the reality that you can be uninsurable. Like
That's good, Brock.
that is just a pure fact. Like I'm going through it right now with someone where a client wants to do this and he's the breadwinner of the family. He's the one that makes all the money decisions. And he's like, oh, let me just put a policy on my wife because she's got better health ratings. But that, like, number one, that's ill advised. And number two, like, he's upset because his health ratings are worse than hers. And his health ratings are pretty bad. But that doesn't mean he can't take on the process of infinite banking with his policy.
Yep.
But I'm in those situations, I'm more concerned with him getting the protection in general. Like I would rather have him have a less efficient system, but still have a policy than nothing at all.
Yeah, let's touch on that real quick practically. So, for those who first time podcast, you never heard us discuss this, we're talking about taking the process of how money flows through your life and pairing it or combining it with the product of whole life insurance with the mutual company. So, what Brock's defining is somebody's going through underwriting. Almost everybody's heard of going through underwriting in insurance or some type of insurance product, but this is for life insurance and it's with a mutual company. And they're telling his prospect, soon to be client, hey, based off of law of large numbers, you are below the standard health rating. So all insurance companies have a chart that basically says, like for me, 6'2", 6'3". If you're in the 195 to 205 range, borrowing, if you have no other major health issues, you're probably going to fall in the standard range, if not preferred.
Mhm.
Okay, which is just the baseline of the average cost of insurance. There are no deals in insurance, the average cost of insurance. So what Brock's explaining is really awesome. And I say it this way, guys, and I want y'all to touch on how you say it. I say often getting qualified when we understand the problem and the need for banking in our life that we can control is more important than what you qualify rating wise or how you qualify.
For sure.
Because once someone knows that, and they understand they're building a system, how does that help shift their thinking, even though they are disappointed in the rating?
Mhm.
Well, I mean, we're going through this right now with somebody who he started going through our process probably about a year or two ago and then had a lot of health issues and also had some different medications he was on, stuff like that. Well, his health has improved. And so now he's sort of come back to the table and wants to see if he can qualify. And so we were having that conversation around his human life value, and what he was going to qualify for if he did qualify. And I was explaining to him that getting qualified is kind of like getting pre-approved for a home loan. Now you know what you're capable of capturing. And he's like, well, if I get approved, I want it all. He recognized the value of having that protection in place and what that could, the peace of mind that could create for him, but also the opportunity that it could create for him as he continued to build out his banking system.
I got to connect this point right here because one of my favorite things in the world of what we get to do daily, because we develop such personal relationships with people that we work with, we get to know their story and what they're trying to accomplish or help them get there, is when our members, our clients have aha moments and they message me. So I had one this morning message me, and he had an aha moment. And I'm like, yeah, you're spot on. Well, I had another conversation earlier this week where the gentleman goes, hey, I ran the math on my own numbers of how much money is going to interest over the last year. What percentage we paid in interest alone? 41% of all their payments in 2025 went to interest. He calculated that. So when he read Nelson's Becoming Your Own Banker, where it talked about the problem, he's like, Nelson was being generous because Nelson said 34.5%. So if we pair that to being insurable, like Brock said, we need to realize that we're not all guaranteed insurance and we can't have as much as we want, to being uninsurable. And we realize that 41% leaving our life can start being redirected to be money coming into our life that we control and benefit from over long range thinking. Then we realize that getting approved and getting as much approval as we can on as many people as possible that our money will allow us to do currently and in the future is way more important. So, Brock, when we think about this, this really comes right back into Nelson saying we have to be willing to rethink our thinking. So, how do you see people's thinking change, or how do you see them rethink their thinking? And what normally has to happen for that to occur? Like, take this example right now where you have somebody who, and I hear it all the time too, Brock, so does Nate. Well, wouldn't I want to put it on my wife since she's better rating? And we're not really getting to the root of the question that we're trying to answer because we don't know the right question yet. Would you agree with that? Do you see that often?
I would agree with that. Yeah,
Okay.
because like it always comes up in question. It's like, well, should I do it on me? Should I do it on my wife? Should I do it on my kids first? And you're getting things out of order, and it should. I'm almost certain, by like 100%, unless you are uninsurable, that the life and permanent life insurance should go on the breadwinner first.
Love that. And let's reframe it. So if you've never heard about infinite banking and you're like, I don't know why in the heck anybody would use whole life insurance or insurance in general to benefit them, reframe it to what Nate said earlier. And I'm sure he probably asked this prospect friend client that we were talking about, hey, if tomorrow your income stopped or you are no longer here, meaning you graduated, as Nelson called it, you passed away, how much of your income and for how long would you want to continue going to your family? Well, that's what Brock and Nate just said, because every man that we've ever asked that, or let's say it another way, every breadwinner, because on occasion that could be the wife. We've seen that before too. Every breadwinner wants as much of their income for as long as possible to continue. And so if Brock or Nate or I ask it that way, it kind of gets you off the focus of the rating, because that is saying my income is protected no matter if I'm here or not. And that helps people reframe it. I want to add a little caveat here though. Insurance companies look at us as their product. And that's what we are. If you want to think about it, that's how I think about it. I'm their product. I went through underwriting. They evaluated my height, my weight, my age, my income. They are thorough because they're thinking about me as an investment, air quotes, for the next 20, 30, 40 years. And the math has to work. And they've been really good at the math for a long time, hundreds of years. So if they look at me like that, I'm not offended by that. I'm excited about that. But it also means if my health happens to improve, if I go outside the norm of what the average person does in America over hundreds of years, and I quit tobacco, or my heart health gets healthier, or I have 10 years of no cardiac issues, or my weight goes down, the insurance company will gladly reevaluate you because you are a better version of the product they underwrote year 2, 3, 4 ago.
Yeah, 10
And
years,
so,
10 years cancer free also is another one.
yes, yep, that's often the case. And what we tell people is, I've seen more often than not, or many times with our own clients, one of my favorite things is it motivates them to take that final hard step of like, when you see on paper that tobacco rating has a much higher cost because on average people die sooner, it motivates you when they're like, well, this is the reason I needed to stop. Because a lot of times we're all hard headed. If I could see what eating Bluebell ice cream was going to do to me every night 20 years into the future, I probably would stop a little sooner, or I would limit it, or I would calm it down, or I'd work out harder. If I could literally play that game out. And that's the same thing with tobacco, weight, any of those things. So there's so many misunderstandings of applications and underwriting in the insurance world
Mhm.
that I would challenge everybody listening to first realize that this is a system for your money to flow to and through, tied to your insurability. If you cannot be approved yet, there are almost always other people in your life that can be. So let's disrupt some assumptions. Okay. Nate, we've already touched on the health rating and worrying about the rating too much, where that's not near as important in this area because we're going to teach them how to take over the banking function, which is the most profitable business in the world long range. Where do people disqualify themselves too early often as well? Anything else you
Um,
could add?
I mean, I can think of one specifically where on occasion people go, "Hey, this concept seems awesome, but I don't even think that I have the money to do it."
Mm,
And so being able to kind of evaluate their entire situation as far as where they are allocating or positioning income, assets, all that stuff. And, there have been many occasions over the years where repositioning or reallocating allowed them to start implementing this concept in their life.
Brock, I know what one of my favorite things are that Nate just touched on that we get to see, but would you add anything to that, or would you say that you see the same thing as an order of operation thing often?
It's almost always an order of operations thing.
Do you mind
They'll
touching on that a little bit more in depth? So the average household that doesn't think their household's a business, or the
Mhm.
business that's not running their business like a business, or the business that is very good at running their business like a business, how it's relevant for all those criteria or those angles.
Yeah. And you've probably heard me say this a ton, but the order in which we do things is extremely important. And I think the easiest place to see this is if you looked at the average American, you may see that they are, on one hand, talking about the fact that they are drowning in debt and they can't pay it off, yet they are also at the same time maxing out their 401k. And if they just stopped funding their 401k for a moment and paid off their debt, they would get a much higher rate of return in their life directly than if they continued to invest in their 401k. And so, you know, like what Nate was saying there was a lot of times people will disqualify themselves before going into this process because they think that they don't have the ability, the financial capability of implementing this process based on what they're doing today. And a lot of times when I meet with someone, it's hard for a consumer to think about repositioning the dollars that they already have instead of, or what they may think is, I'm going to do the whole life insurance on top of everything else that I'm doing. And one of the things that we like to talk about is how can we implement this with you with no additional out of pocket cost of what you're doing today? And what
Love
that
that.
comes from is repositioning the dollars that you have.
Say that line one more time, Brock. What if you can do this without, how'd you say that again?
So one of the things that we try to do with everybody is implementing or improving their financial life with no additional out of pocket costs of what they're doing today.
And let's relate this is a sound principle that's foundational in any area of our life. What I mean by that, you go to the chiropractor and the chiropractor says you don't really have a knee problem, you have a core problem. You start getting your core stronger, it'll strengthen up your back. If you start strengthening up your back, it'll strengthen up your leg muscle. If you start strengthening up your leg muscles, it'll stabilize your knee. If you start stabilizing your knee, the pain will be gone. And that is the truth with money too. And
Mhm.
a big takeaway, and what I have had the privilege of being able to learn lately and study, is if you can get to the foundational principles, they work in lots of things, if not all things. So here's a couple with money. Nate, money's gonna flow. There will not be anybody that we ever speak to that says, I want to become a bum. Well, there might be, but they won't be working with us. I want to become a bum and not make money. No matter if they're in the go-go years, 20 to 50, the slower going years, 50 to 60 to 65, or 60 to 65 to 70, and the no-go years, 65 to 75 to 85 to 95, somewhere in there, depending on your activity level. But here's the funny thing, Nate. Money and where we put it is just like motion is for our age and how much more mobile we are on average, the more motion we have in our life as we age. There's a reason that other cultures have men that are in their 60s, 70s, 80s, and 90s walking around like Americans that are in their 40s, 50s, and 60s, because they are constantly being mobile. They're constantly stretching and squatting and moving and bending, and their body adapts to that. So, as Brock and Nate have made great points, order of operation is vital. But you and I, and Nate, this was for us too, we didn't even know that we had a misalignment of our order of operation. We didn't know we had a core issue. It required a coach to come in and go, let me look at your situation, or a chiropractor, and prescribe what really is the problem and the solution. And as Nelson said often, once we know what the problem is, we know what to do, or the solution becomes clear.
Mm-hmm.
So, Nate, what if you stop thinking, do I qualify? What becomes possible?
Pretty much everything.
That makes people uncomfortable.
Yeah. I mean, the first question that you have to ask is, what am I willing to do to learn? What am I willing to do to lean in? Or am I willing to lean in and learn? Maybe that's a better question. And you got to answer that first before you move on to anything else. But the term insurable interest is something that people need to understand, because insurable interest means that there are people in your life that you have some sort of financial connection to in some way. And the insurance company ultimately determines what that financial connection is. You know, if there would be some sort of financial loss or burden that would be incurred in the event that something happened to that person. So immediate family is a no-brainer. So your spouse and your kids, like that's obvious. But there might even be extenuating circumstances where, like, maybe you might be able to get policies on nephews and grandkids,
Business partners.
nieces, nephews, grandkids, business partners. A business partner is one of the more clear-cut, insurable interest things. So if you do have a business partner, y'all have insurable interest in one another, and the insurance company can determine what that looks like and how y'all can capture that insurability on each other.
Brock, here's a question for the business owner, because a lot of times you connect with young entrepreneurial, minds that are already creating high incomes. But this is also relevant for the household. I cannot emphasize this enough. Nelson's principles work no matter where we're thinking about money. All right. So this is where hope and curiosity starts to build and blend. So, Brock, in a business owner's world, if you have a very successful business owner come to you, and when I mean successful, is they're making a much higher amount of revenue and income than somebody average, as far as in the traditional model of making money. What options do they often miss, and how often do you help them see, with questions, that their partnership can become, for lack of a better word, an asset if there's insurability protected inside their company and the value that's already being brought mathematically, and
Mm-hmm.
how that works?
Mm-hmm. I think there's two clear-cut items there, which is clear-cut. Did you just say that, Nate? Because I've never said that in my life, I don't think. Clear-cut.
Maybe.
No
I don't
idea.
know. But I think one of y'all just said that and it was stuck in my head. But there's two items there, right? There is the key employee, to where you say, hey, if this employee were to disappear tonight, my whole business would be disrupted. And so what you can do is you can create different opportunities where you could do deferred comp strategies, or insure their lives, but still be able to utilize it for the business. The other would be as simple as a buy-sell agreement, which is, let's say that this is easy. Nate and Brandon are in business with each other. But if Brandon were to pass away, Nate would now have to be in business with Brandon's wife. I don't know what Nate and Brandon's wife's
You don't want to be in business.
Yeah.
They probably wouldn't want to be in business with each other.
No,
And
we have a partnership agreement.
Yeah, almost always it never works out when families, partners are together and they're like, oh yeah, it'll be fine, everything will work out. It doesn't work out that way, ever, hardly ever. And so what you would do is you would buy life insurance policies, possibly on each other, or have a company that owns insurance on the partners, so that when one does pass away, the life insurance benefits comes into the company and then purchases out that person's shares. So those are some key opportunities. But then you also think about, Like I'm thinking about a certain client of mine right now where when I met him, he was in the coal business and he would buy like a new truck almost every year for the business. Well, what he would do, he would go finance it with the bank and then he'd pay it off as fast as possible with the new cash flow that it created.
Hmm.
He already had all the capital in his bank that he could pay it in cash the first day, but he didn't. So what we can change now is to say, what if you bought it in cash with your policy loan and then paid the policy loan back with the newfound dollars that it created? And so I think that is an incredible opportunity for a lot of different people, whether that's trucks or boats or things, with the mindset not of I'm buying a car and financing my car and that's what I'm doing as an expense, but more of this thing creates income for me when I purchase it, whether it's a boat, a car, a plane, a truck, a x-ray machine. By you implementing that thing, by purchasing it or utilizing it with the policy, you can recapitalize your bank because of the newfound cash flow that you created with it.
You just brought up a great point that comes up often, that as we get to have these conversations all the time with business owners and households and, everybody in between, we first have to often be sure that we understand what words mean in the world that we're teaching. And often they are different than what the world teaches those words mean.
Mhm.
So what you just described perfect is the fact that my money is getting stored or saved somewhere already, and it has rules. If I start using my insurability on me, my human life value, like we talked about, or loved ones or business partners, it gives me the opportunity over time to store my money in a different location. Policies, not for any other reason than you qualified. Because as Brock said perfectly at the beginning of this, we have to realize that you can't just walk down to the street and go, give me as much insurance as I want at any insurance company. So it's something different. And then Brock's describing the process that Nelson talks about, where he says on page 3, this book is not about investments. It can certainly include investments, but it's about how one finances the things of life. So what Brock just talked about is that business owner who buys a new vehicle every year because he has the cash flow and the capital. The only difference that he has made is where he stores his wealth, where he stores his dollars as he builds those up into policy or policies, I would imagine. So then he can use that for the process of banking, financing a vehicle, all those things. So, Nate, what we're really talking about here is control and certainty and peace of mind. We use that terminology a lot. That's really what Nelson was getting at, is that as we started to begin the process with of this conversation, you can try infinite banking, the concept of infinite banking through any product, checking account, savings account, qualified plans, real estate, HELOC, the list, it's really not that long of a list when you think about it. But the reality is there's only one place that can allow you to actually begin to take over control of how money flows through your life. And Nate, do you see that often, or can you think of an example of that recently where an aha occurred where they're like, "Oh, I like that option better," because they began to rethink their thinking?
Yeah. One thing that someone brought up to me recently that I thought was interesting is they recognized that the longer, and this is all about rethinking your thinking, the longer they had the ability to pay premiums on their policy, the more opportunity it was going to give them in their retirement years in a tax-free environment. So they what they because and it actually it jogged my memory because it came back to this part of the book because um in order to withdraw funds like dividends in the example that Nelson uses, you can't exceed the cost basis essentially. So that means the amount of premiums that you're putting in work in your favor once you start withdrawing, in those later years. So that's another idea or another example of just the way people kind of rethink this whole idea of passive income, retirement years, and all that stuff, and the whole term premium in and of itself in the typical conversations that you would have out there. A premium is associated with a cost, but when people start leaning into this, they start to see how premium is now associated with an opportunity.
Yeah. Brock, one of the things that tied to what Nate just said, you start shifting in your thinking of the word premium. And we talked about this at Sunday school. Two things about the same thing can't be true at the same time if they're conflicting. Would y'all agree with that? Like, I can't believe this and believe this about the same topic and both be true. So I'm going to give an actual real live example. I can't hate paying premiums to an insurance company in the traditional sense because I don't like what it means and I think they're taking my money and it's a cost. And then on this side, for us three guys, love to pay as much premium as possible to whole life policies as we can, as often as we can, that we're capable of. Something has to give. And because I specifically, and Nate have lived, Brock has been very blessed to not have to bridge that gap between those two thoughts. But Nate and I had to. We now can say confidently why we see it as a privilege to pay premium. Goes all the way back to what Brock said at the very beginning. We need to realize that you are not insurable for the rest of your life. Every day you become less insurable and insurance costs more. That's the beauty of the guaranteed product side of this product where we store our wealth, is it's eliminating, removing a lot of the guessing because it's based off of sound actuarial science, thinking, mathematics. So here's one thing to think about, and I want you guys to tidy up with it here and tell me what jumps out as your closing thought. If nothing changes, if nothing changes until your thinking changes, what happens if you keep thinking the same way? If nothing changes till your thinking changes, what happens if you keep thinking the same way?
Nothing.
So what question would you guys encourage our listeners to think about in regard to our conversation today, the truths of what Nelson's foundational principles touch on in his book and prove? What would be something that you would encourage as a call to action, if you will?
I would say, can Nate, Brandon, or Brock see something that I'm not able to see in my financial world to improve my position? Because if we wrapped up everything today, what we were talking about, the beginning part was, I think, what does it mean to be uninsurable? Or what do I do if I'm uninsurable? Uninsurable means you can't get insurance. The life insurance company thinks that you are too high of a risk and they will lose money on you. And so you are uninsurable and they will not write insurance on you. And it is a lot more common than most people think. And a lot of times, some people will disqualify themselves before they even go into an application because they think that they can't fund a policy or do anything based on what they're doing today. Because most of the mindset is from the client perspective, can I do this on top of everything else that I'm doing? Whereas we're coming from a standpoint of what if we repositioned all of our dollars so that you didn't come out of pocket any additional expense than you're doing today, and then realizing, hey, this can actually be done wherever I need it to be.
Here's a thing to think about, Nate, tied perfectly to what Brock said, is so maybe we're thinking the wrong way. Maybe we're thinking from a scarcity point of it is what it is and it's always going to be, and there's no different thing I can do to improve my situation. So what if it's more of what needs to change in my thinking for things to actually change? Well, what do we have to get real honest with ourselves about first, Nate? Do we want things to change? Or are we happy doing what we're doing and we think it's the best thing we could possibly do?
Yep. Yeah.
And if we know, good.
Well, it just reminded me of the statistic that 66% of people are not actively working with an advisor.
Of any kind.
I mean, we have this awesome opportunity every time we meet with someone to sort of prove our worth to them, and they get to decide if we're worth working with or not, because we don't charge anything up front just to have a conversation. And so I would just challenge anybody listening, hey, test us, see if we're worth it.
Add a piece to that. Nate and Brock and I are not financial advisors in the traditional sense. We understand the power of whole life insurance and how it can be utilized for taking over the banking function in your life. And we live what we teach, and we built practices around that to share it with people who wanted to. And Nate and I are guilty of saying often we don't charge you anything, but that's not technically true. The whole truth is if you're not willing to learn and you're not willing to lean into the fact that maybe I need to rethink my thinking, then we're not going to be a good fit, because you're saying I'm happy doing what I've been doing and you don't know what you're talking about if it's from different points of view. The whole truth also is that if you're not willing to invest in your greatest asset, yourself, your ability to rethink your thinking, and you're not willing to buy a book and read or listen to a podcast or study a topic that makes you uncomfortable, that's the true cost. And a lot of times people can help us understand clearly how much they're willing to do that by these things that we hear. Hey, to my current thinking, this is what I understand, but I know there's probably something I'm missing because what I've been doing hasn't been getting me where I want to go. And when those conversations start coming out, we already know you've made the investment. It just hasn't had money follow it yet. And that's when it gets real fun. As compared to Brandon and Nate and Brock are insurance agents who only want to make commission off of whole life insurance. Well, if that were the case, I go back to our dear friend Ryan Griggs. Yeah, we chose to start a business and create a podcast talking about something that is so misunderstood that people will lose their mind on the internet to tell you how stupid you are for teaching it. Yeah, we chose to do that. Who does that on purpose? So I know that we believe in what we do because we live it, but you have to decide why it makes sense to you. So Brock, Nate, all someone has to do is reach out. The cool thing is there's going to be no hidden expectation other than, hey, here's some work that you can do to see if it's a fit for you. We'll see if we're a fit for you. You'll see if you're a fit for us. And maybe, just maybe, we unlock that door in your thinking that allows you to start rethinking things and getting different results. And if that's the case, then we've done something we enjoy doing every day anyway. Appreciate you joining. We're so grateful that you share your time with us, your drive down the road, your, mowing the yard, wherever you listen to us or watch. We really appreciate that, and we don't take that lightly. You can find us on Cashflow Legendz with the Z.com. You can also message us on all the socials that we're connected to that I couldn't even name and have enough time to name. And we'd love to connect with you anytime we can. Have a blessed day.
Thanks for listening to Cashflow Legendz. If this episode helped you think differently, subscribe to the show and share it with someone who needs to hear it. And when you're ready to start building your own cash flow system, schedule a clarity call with Nate using the link in the description. Money, cash flow, legacy, break the rules. Build your legend.